Hello and welcome to the stock specific class here for Thursday, July the 7th. As always, if you have any questions during the week or any questions I don't get to in the live class, please send those to jerry@traderspro.com. Now we have a little bit more clarity as far as direction, in near-term direction, than we did on Tuesday. We'll talk about that when we look at the charts. Real briefly here on the directional alerts. I don't want to spend too much time on this because it's been kind of the same for the last couple updates. Still in a bear market for the longer-term trend. And again, we're kind of in this no man's land in the middle. We're not in any extreme that would indicate that we're in any major reversal area, at least from the indicator standpoint. So, we're not oversold, we're not overbought. Breadth, same thing. It's still high right here, but it's out of the extreme range with a little bit of the rally we've had over the last couple of days. Sentiment is still high, so there's really not a lot to really focus on there. Now, when there is, I'll spend more time on that. But those indicators are specifically looking for extreme conditions. We're just not in that area right now. Buy-sell ratios have kind of come a little bit closer together, so we're not in an extreme area. They are apart, but they're not in an extreme level. These are more extreme areas here, where you would expect that, in this case with the sells up here and the buys down here, that would be kind of an oversold, and you could see a little bit of a rally coming off of that, with the buys starting to move up, sells starting to come back, some of the sells going back to hold, so that would cause that line to go down. We're pretty close together right here, so you can see that it could obviously become even more extreme, or it could cross over. We could rally up and this thing could cross over. So again, not much that indicator is telling us. Now, we do want to pay attention to the buy-sell ratios of the entire market, of all the stocks out there. We're sitting at a 0.46. Remember, when you want to start adding more aggressively to the portfolio, it doesn't mean you have to. I'd like to see more of a bottoming process, a stronger bottoming process before I start adding aggressively. But if you're going to be looking, as we do in these Thursday classes, for that 98 strength rank, waiting for it to go from hold to buy, you'd like to see that overall indicator be above 1 right here. Buy-sell ratios of the entire market be above 1, and so we're not quite there yet. But as you can see, within a bear market, you got to remember a bear market is trending downward. So even when this thing is spiked up above it, it's kind of that rally within the downtrend. That's why I'm saying, just going off of this alone, you're not going to just jump in and be aggressive on this alone. But that technique of looking for high strength range stocks going from hold to buy works a little bit better when the buy sell ratio of the entire market is above 1, and we're below that. Now, it doesn't mean, again, I'm looking to maybe add a couple stocks to portfolio today, but I can hedge it with those inverse ETFs as I've done before. So again, I talk about this all the time in the class. There's the software is designed to be, shut off your brain and just trade, buy signals, sell on the sell signal. It's designed to be very, very basic for people that are busy, that really don't want to learn how to trade but want to make money in the markets. These classes are designed to teach you more and teach you how you can incorporate these algorithms with additional skills like reading price action and reading chart patterns, and you're going to get better results because of it, because as it is with any industry, if you're going to become a master or expert in it, you're going to perform better than someone that isn't. my casual basketball playing is not going to make me able to play in the NBA. Okay, those people spend hours and hours and hours at the craft. They're also have other gifts as well of height and athleticism. But if you're willing to put the time and effort into it, you're gonna have better results than someone that isn't. So just understand that. I mean, it's not a knock on the software, because the software does a great job of putting us in front of high quality companies that are proving that they're performing, that are in trends, and but we can get a little bit better results by being able to read the chart patterns and the price action, and that's what these classes are designed to do, is help you do that. All right, and this sentiment indicator is right in the middle, not showing any sort of extreme level there. Let's jump into the chart and talk a little bit about. I did talk a little bit more about this on Tuesday. This possibility, we were looking at. This was Tuesday's candle right here, and at that time it was okay. You know, we're in this little sideways range. Could this be the bearish ABC pattern? Here's the first move down. This is just a pause, and we're going to drop right from here. Or is this wave A, wave B, and this is wave C, and then we're going to drop from there? Those were kind of the two things that we were talking about. Now, obviously, with a little bit of a move up yesterday, although yesterday was a little bit of an indecision candle, so it really wasn't a confident close by any means. The Fed minutes were released yesterday, and that was adding into our expectations as well, because the last few times Fed minutes have been released, once was back here. We had the drop right afterwards. I think it was right in here or right in here. We had a drop right afterwards. Might have been this one right here. And so, but again, as I talked about on Tuesday, you don't ever want to base your decision to trade something just on, just any sort of historical pattern or behavior. It can be another factor that you consider, but you don't want to, you don't want to base your entire decision on that alone. So today it's moving a little bit higher here. It still doesn't mean that can't still play out, because maybe we finish up this week. If we rally up a little bit further here, or even just get into this area right here, there's a significant resistance right in through here, and right up in here is another one that's pretty noticeable. These are gap areas right here, and there was some support right through here. So we're going to be bumping up against this major resistance area. It used to be support, now it could be resistance. Hit it right here and drop. It still could break through, because on an ABC pattern, very, very often the wave C will go beyond the end of wave A. So if that's wave A, wave B, usually wave C will go a little bit beyond this point. Doesn't have to, but most of the time it does. So I usually expect it to, if it is a wave C. So, I would assume that we'd move into this area here, or even up into this area here before declining. And again, that may not finish this week, but it's probably going to finish within a few days if it does that. So what we're looking for then is, do we see a bearish reversal candle? Do we see a bearish inside day like right here, or just a strong downward candle? Here we try to rally, and then we had a strong downward candle right here. Here we try to rally, had a strong downward candle right there. Do we see any sort of sign of a reversal? You start to look for that. Now, could it be that this is the bottom, and this is the major bottom, and we're going all the way back up to new all-time highs? you know, that's always a possibility. But again, we're not looking at possibilities. If we focus on possibilities, I can spend hours giving you every single possibility that I can see and still not cover all of them. We're not going to focus on possibilities. We want to focus on probabilities. And in order for me to get to that point where I think that is the bottom and we're going to rally significantly off of that, I need to see more proof in the chart. I need to see stronger market breadth and behavior, volume coming in. There's a lot of things I need to see before I buy into that. I'd like to see higher highs and higher lows. We'd have to get above this high right here. That's a significant lower high that took place. We had a lower low after that, so I need to get above here, and I'd like to see a strong move up above there. I don't want to see it to look more sideways or choppy as it's moving up that way. So, yeah, that's a possibility, but not a probability at this point. Right now, the trend is down, and so I'm looking at this as a bearish ABC pattern and or a rally within the downtrend. And again, part of that too comes from what I've talked about many times, but I know there's new people that join each week. We're kind of waiting for that panic sell-off that often happens at these bottoms, and gets that VIX to spike above 40. We just haven't seen that yet. So there is a little bit of complacency that's getting into the market though right now, because some of these drops haven't led to concern. With the VIX getting above 30, VIX getting above 30 is showing there's some fear in the market, but not panic. Some of these have spiked the VIX above 30, but they just haven't, like I said, they've been short-lived, but the rallies are really choppy, as you can see. They're really sluggish. And so what's happening here is that people there's a lot of people that are talking about the possibility that we bottomed already, and that the market has already priced in all the bad news, and it'll start to move back up. And that puts it in a pretty dangerous spot, because again, it's when you feel like it's over, and then the selling really starts kicking in. That's what creates that panic. That's how you get to that panic state. And I think that's important to, when you're trying to analyze why the market does what it does, just try to put yourself in that position. Imagine if you're a big fund manager and you have to be long the market. You have to be in the market. You can't be on the sidelines. And you're trying to find something that you think is going to go up in value, and you think you finally found it, or it's the only thing you can find that's going up, and then it reverses and has a big sell-off day. Well, now you don't know what you're doing, but you're losing a lot of money, and you got to make a decision very quick, and that's where you just you don't have any sort of target to sell. You're just selling to get out. You're trying to just survive, and that's how these moments are created. And so that's why I talk about them a lot in the classes. Is I try to look forward and say, okay, what's the market mood right now, and what's coming up, and what could possibly be a possible trigger that causes that panic to kick in. And not that it plays out that way, but I'd like to be prepared by thinking through different scenarios that could take place, so that I'm not caught off guard when it happens. I can actually, because if I'm expecting a panic sell-off, then when the panic kicks in, I'm not panicking. I'm actually looking for opportunities to get in or to start setting up my game plan to jump back in and do the opposite of what the crowd is doing at that point. All right. So again, how much longer could this last? Like I said, you'd want to see how it reacts to this area right here. That could be something we see as early as tomorrow. And then, right in this area right into here. Well, that's why it's kind of a zone. This is the kind of a zone right here. that's a pretty strong resistance zone, and we're looking for any sort of bearish reversal candle that takes place. And like I said, if I see it taking place in one of the classes, I'll point it out, or if I think it's close, I'll point it out. Dow's a little bit more sluggish today than the other indexes, but Nasdaq is pretty strong. There's a strong move in the chip stocks, which is something to keep an eye on as well, because again, the market's not going to rally without chip stocks rallying with it. So if you see any sort of weakness in the chip stocks, even if the market is showing more strength, you'd be a little bit concerned that the rally could be over, the near-term rally could be over. Bonds are still dropping. I talked about this on Tuesday, that this was possibly a bearish ABC pattern, and I'd expect to see that there could be some sort of reversal. I said if it got above here, that could signal a potential trend reversal, but we had the strong move down yesterday, continued move down today. It looks like we're getting another impulsive move down, so I would assume that trend is going to continue to move lower. Gold is paused today, but it dropped below that support area. We were looking at that on Tuesday. That wasn't too much of a shock either. I kind of pointed out this range right here. If we drop below this, that'd be bearish. If it got above here, it'd be more bullish. We dropped below there. Could be that we're just having another correction, and then it drops again. If you're looking for a trend reversal, you'd want to see impulsive down and then impulsive up, and then corrective, more sideways. And with the kind of the pause we're seeing today, it looks like it's kind of a corrective phase for another move down. And this could be really short-lived. It could just be a one-day pause, and then it continues to move lower. But it's still acting like it wants to go down. A lot of that has to do with the dollar, which we'll look at that chart here in just a second. Now, oil has a rebound today. Remember on Tuesday I pointed out that we could maybe drop a little bit lower, but this could be maybe a bullish ABC pattern, and then maybe we start to move back up again. With this gap up, it creates an impulsive down, a little bit of an impulsive move up. Now you'd want to see follow through to that, because if it came right back down again, it could be corrective for another move down. It just has a one-day move. One-day move is not going to necessarily signal a full impulsive move. You'd want to see follow through to it. But if you get another up day, especially if it's another big up day, I'd assume that was a bullish ABC pattern, and that oil is trending again. What I'm kind of was watching today, one of the first things I went to look at when I saw that oil jump like that is I went to go look at the dollar, though, because remember that was a powerful correlation. On Tuesday, we had the big move down in all the commodities, gold, silver, oil, grain, wheat, corn, all the commodity and commodity stocks dropped sharply with that big spike up in the dollar. So with the big move up today, I went to look at the dollar and see if there was a big move down in the dollar, but there isn't. The dollar's just kind of paused right here. So what does that mean? Is it relates to oil? Well, again, I don't trust the rally in oil, the one-day rally in oil. I'm not going to jump back into oil stocks right now. I know it's tempting to go right back into it again. I want to see a little bit more follow through that, and I'd like to probably see the dollar come down a little bit, or at least, I'm not saying the dollar would have to trend down, have a big move down or anything like that, but at least go into a correction, maybe come down and retest the breakout right here, to make me feel like oil could have, be able to rally for a few days, or, a week or two or something like that. So, because I didn't see a decent move down in the dollar in relation to the oil move, I'm going to kind of wait on that one there. But that's one of the things that jumped out today. when I saw that move in oil. The VIX again is not telling us anything today. As I say many times, if you're expecting the VIX to tell you something significant every day, it's just not. Sometimes with the market is up and the VIX is down. It's exactly what it should be doing. With the market up, it should be down. I am paying attention though to the fact that this was a kind of an impulsive move up right here, and this has been a little bit more corrective as it's kind of come back down. Although, that's a pretty deep retracement. Now, I don't hold the chart patterns on the VIX charts. I don't interpret them the same way I do with the equity charts, because remember, the VIX itself is a derivative instrument. Its value is derived by something else, kind of like an option has its value derived from the movement of the stock. Its value is based off of the implied volatility of the S&P 500 index options, and that can fluctuate, constantly throughout the day. And so, the charts don't. The charts and even the price action sometimes doesn't always precede or lead to the expected move. For example, if I get an impulsive move up in the VIX and it looks like I have an ABC pattern, the ABC pattern on the VIX may not lead to another move up as much as it would on an equity chart. It's a little bit more erratic, and you can see that here in the movement of the VIX. It tends to be a little bit more erratic. What I look for when I'm analyzing the VIX is I'm looking for does a market have a small move and the VIX has a big move? So if it's moving in the same direction, so for instance, today, if the market had a decent move up, it's a decent move up today, but the VIX had a big move down, what that would tell me is that the traders are probably really getting more bullish. Professional traders are really getting more bullish on their outlook because they're finding no need to hedge at all, and so that would be a little bit more of a bullish sign. If you see a big move up in the market, but a small move down in the VIX, that could tell me that there's maybe still a little bit of concern that they in the rally, they don't quite trust the rally yet. And then obviously, if you see the VIX moving up and the market moving up, that could tell me that they're really, really not trusting the rally. They're buying protection, even though they're buying stocks. They're buying protection. Usually, you see that near a market top. The market will get overextended, overbought, and the professionals know it, but it's still a bullish trend, and so they still are buying stocks, but they start buying those protected puts as well, just in case it reverses on them. And that's when you can kind of see the situation where the market moves up and the VIX moves up. It doesn't happen all that often, but that's why we want to pay attention to it when it does. But you can see this kind of orderly decline right here. It's been back and forth. This is showing complacency building. Happened right through here too, where it's back and forth, and then bam, and you get kind of the back and forth, and then you get the impulsive. That's when you get these drops right here. The VIX starts spiking up. But like I said, right now it's not telling me anything significant that I can see that, and so I'm not gonna. I can find something for it to tell me if I look hard enough. And by the way, that's some good advice for chart reading and analysis. And usually this comes when you get experience. You know what you're looking for. You know how to read a chart. You know how to read the price action. But I have found that the best trades I have made are when I pull up a chart and it's obvious right away what that chart is what that stock is likely to do. You see a nice bullish pattern and it jumps out at you immediately, or you see a candlestick formation that just jumps out at you, like a hammer candlestick formation or something like that. It just jumps out at you, and especially if you see it on a bunch of charts, you know that it almost doesn't matter what you're going to trade, you're going to probably make money on it. Where I run into trouble is when I want to make a trade, and some of you can probably relate to this. When I want to make a trade, or I feel like I need to make a trade, and I don't see anything I like immediately, so I keep looking and keep looking and keep looking and keep looking, and I'm going through 100 stocks or 200 stocks or 300 stocks, and it's taking me forever. Nothing looks good. Nothing looks really like where I'm confident in the direction. And then I find something that I can trade, and it's a decent pattern, it's a decent price action, and I go trade it. Now, sometimes those trades still work out. I don't say no, they don't, but I find that those trades have a stronger tendency not to work out because there's not a lot of momentum behind it. When the charts are obvious and when they jump out at you, that's when you know you've got a significant or a high probability trade situation, and especially if you see it on a lot of stocks. And that's why, sometimes you'll see me just kind of jump into a whole bunch of things at once. And when I do that, it's because I'm seeing I'm seeing a strong pattern on a lot of different stocks. Now, we haven't had that from the bullish side for quite a while. But we're going to get there. We are going to have these updates. So like I said, when we start trending back up and get more in a bull market, I'm going to have to, there's going to be so many stocks in this class on Thursdays that I've got to kind of cut it off. And we can be a lot more selective as to which ones we want to trade. And we're going to have a lot of success with the ones we are trading because of it. All right. Chip stocks, I told you again, had a nice reversal candle we saw on Tuesday. A little bit of a pause, indecision day yesterday, and then this is showing just what the market is showing, a nice move up. And it could be one of the reasons why the market is rallying as strong as it is, and why the NASDAQ is looking stronger than the Dow, because a lot of the technology stocks obviously are using chips, and so that's why we look at it as a leading indicator. Now, what would be significant then that I want to focus on with the chip stocks here? Well, here was the last lower high before we went to a lower low. So you'd want to break out above here, and you'd want this to continue to look impulsive. It's gone up almost every day since Tuesday, the reversal Tuesday, and it's been going up. It doesn't have to have big moves up, but you want it, and it could have a pause day where it just goes sideways for a day or so, but you'd want it to move up above here pretty quickly. And if it can do that, you've gone to a higher high, you had impulsive down right here, impulsive up, that often is a signal of a trend reversal. And that'd be something that would cause me to turn a lot more bullish on the market if I were to see something like that as well, especially since there is significant resistance at this area right here. It failed right there. It failed right there. For resistance here was support here. So this is a really key area. You get above that, and that would be significant. Now the Dow Transports, IYT, we compare this to the Dow Industrials, and again, it's looking like the Dow chart. I mean, this is looking a little bit more sluggish than what we're seeing on the S&P chart and even the chip stocks. But again, it still could be the same pattern that's forming, that this is wave A, wave B, wave C, and then we move lower. So again, I'm not going to overreact to just one day where it's showing it's not moving as strong as another, because that happens all the time. You get some sectors that are moving strongly in a particular day versus others, and very often you'll see the Dow is either outperforming the NASDAQ or underperforming the NASDAQ. The NASDAQ is outperforming. Usually they're not moving the same percentage because there's different sectors within those indexes. We tend to view the NASDAQ as more of the technology index, which for the most part it is. But so again, just a one-day move. We're not going to overreact to that. Bitcoin has had a little bit of a rally here, but I still think this is a little bit more impulsive right here. This is looking a little bit more corrective, kind of what happened like right here. We had this big drop and then tried to rally. Looks like the same thing, but again, if it can break above here, that would be going to a higher high after a lower low. Could be potentially a trend reversal taking place. And I have talked about this, where I do feel like we'll see Bitcoin's bottom before the market bottoms. So it should start to rally back up before we see the big whoosh in the regular market, if that is going to happen. So we'll keep an eye on that. All right. So as far as stocks to go over today, again, I still don't want to be jumping into a ton of stuff, but I am going to get into one position to at least have something. So I went into the watch list, was looking through the watch list that we have set up. Again, these have a lot of stocks that have been moving up when the market was moving down, oil stocks, defense stocks. By the way, and I was going to go through this when we went to the segment. I can do it here. Going through the sectors right here, aerospace under the buy section. We were in Northrop Grumman for a while. Made some money on Northrop Grumman. NOC is a ticker symbol. 96 strength rank. Let me switch this back to signals here. You can see it's been mostly moving sideways through here. All these stocks had a big drop on Tuesday. I talked about that on Tuesday. This one's rebounded, had a rebound. Well, a lot of them had rebound days yesterday. We're right up here in this breakout area. In fact, today we're above the breakout area. This is a false breakout right here, but we're back above that breakout area. This is one that you could consider as a potential trade. I'm waiting a little bit because the other defense aerospace stocks that I have in that watch list, Lockheed Martin and General Dynamics and some of those other ones, they're not looking as bullish to me, and they're not breaking out above anything significant just yet. So I kind of want to see a little bit more of the group looking stronger before I get in. By the way, again, this comes from when you're in bear markets, you got to be a lot more selective. You want to look for a lot more confirmation. If I'm in a bull market and a strong trend, I don't care so much if the other stocks aren't participating. If this one looks like it's breaking out, I'll jump in it and trade it. But because of the market conditions overall and not knowing if this is just a rally within the bear market, I want a little bit more confirmation, see a little bit more participation with other stocks in the sector, things like that. So, but I'll point this one out as one that I was considering, or that I wanted to talk about in class today. But a lot of the stocks in that watch list are, oil stocks. And like I said, I don't want to jump back into oil just yet. I want to wait for a little bit more confirmation on that. But I did. There are a few that I've added recently. One, going down near the bottom of the list here is this RCMT, and it has a 100 strength rank. Now, it still has a sell signal, but again, it's the context of that where look at this nice uptrend. So when the market was moving down during this period, this was outperforming, and it looks like it. Now, when I first put it in the list, I put it in the watch list right here where we had this little pullback, but I did point out that this was kind of a straight move down. So this could be just wave A, and this bounce could be wave B, and we could get wave C. And that's what I'm looking at right now, is that maybe this is completing an ABC pattern. Bullish hammer formation, candlestick formation right there, and then some follow through today. Like the entry into when I got into ADM. Now I got stopped out of that one on Tuesday. It's actually, I got stopped out and jumped right back up again, but that's all right. I can always get back in it again if I get more bullish on commodity stocks. But kind of the same idea here. I'm going to get in, put a stop down below here. This is my risk if I'm wrong. If it just gets back up to its previous high right there, I'm going to make 3 times what I might lose. I'll take a 3 to 2.5, 3 to 1 reward to risk any day. Now, I'm not saying it will get back up there, especially when I'm still a little bit more bearish on the market. But I also know too that, like we've been doing with those inverse ETFs, I've been using the SARK and the SOXS. Inverse of the chip stocks. Now, I'm not going to use that one right now because the chip stocks look like they could rally. But I can, if the market does reverse, I can jump into those to hedge this a little bit. So I don't plan on losing any money on this. If the market reverses, and goes back down, I'll jump into those inverse ETFs, and they should offset any losses on this. So, but I don't want to be jumping into a ton of stuff. I just don't want to do that just yet. Now, you're free to do what you want. But I still want to be a little bit more patient here. So the stop, the low right here, what I'm looking at, I'll put my mouse on this day right here because that'll show the low. And I'm looking right here for the low of that day. Now that's not accurate because I'm not on it yet, but that's where I want you to be looking when I get my mouse on here. So the low of that day was $17.77. I'm just gonna, anything below that is probably a decent stop. I'm going to use $17.70 as a stop. Could you use $17.71? Could you use $17.72? Could you use $17.77? Yeah, whatever you want to use is fine. It's just as long as you're gonna look to get out. And by the way, again, I also want to point this out that I don't use exact stops. I want to see a close below that low. So if it starts trading below that low, if I could watch it, I'm going to kind of wait to the end of the day. I'm going to kind of wait to the end of the day to make that decision to stop out, because sometimes it can dip below an area and then form a bullish reversal candle, come all the way back up, and actually look like it's going to rally. It could do the opposite. It could keep falling, and it could end up being a little bit bigger loss than maybe what I was planning. But that's just the way I do it. I know how to stop out. I can trust myself to stop out of a trade. I'm not going to, play the hope game there that it's going to turn around. If you have trouble with that and controlling those emotions, use an actual stop loss. You'd want to maybe put an actual stop loss in at $17.70 or something or whatever you want to choose, and actually have it trigger if it got down below that, actually just get you out automatically. So you kind of take that decision away from yourself. So let me go ahead and Click this little blue line here. We want to add it to the portfolio. Stock specific class, stop price in at 1770. 200 shares. So what I'm doing here is I don't want to have more than 10,000. Usually I like to keep it around between 7 to 10 is what I've been trying to keep it within. And then I don't want the trade at risk percentage right down here to be over 1.5%. So that's part of the, let's see here. I might have to, let's see, that percentage is going to be way high. I don't know if I'm going to be able to make this trade unless I have just a really small amount. Oh, I was looking at the wrong one. I'm looking at the portfolio at risk down here. Sorry, I was like, that doesn't make a lot of sense. It's a portfolio at risk. I don't want to have more than 1.5%. So I'm fine on that. Sorry, I had a little bit of a mental block there. So we're fine. Let's bump this up to, because I'm like, it looks fine. How come this doesn't look right? Let's try 500 shares would be at 10,000. I want to be at 10,400. 400 shares would be at 8,000. And there it is. So my portfolio at risk is actually below 1%, which is fine. So this is, I don't want to have, if I do get stopped out, I don't want the loss to be more than 1% of my entire portfolio. We have a $120,000 portfolio right now. So we're fine. That's fine right there. This is how much I would lose if I do get stopped out. You've got to be aware of that, because if that's too high, and that would freak you out if you lost $1,000, it shouldn't if you've got a $120,000 portfolio and you're managing all this. But if that is, then you'd want to reduce that down. Maybe you can only handle $500 loss. Okay, then cut the shares in half. You're going to do 200 shares. And obviously that means your amount that you have in the trade is going to drop as well. You only have 4,000 in the trade, but you got to manage that side of the trade. You got to control your risk and make sure you can accept the risk. All right, so let's go ahead and purchase this. And like I said, I can hedge it with the SOXS, which I'm not going to do right now. If we look at the SOXS, it should be down with the chip stock. When we looked at the SMH, and it was up. See, it's down right now. I don't want to be, this is an inverse ETF. So when the NASDAQ in particular drops, this will go up in value. So we can still be long the market. We're not shorting anything. I don't like to short stocks. I'm not going to have any short positions in the portfolio here. But we do want to have an opportunity to make money if the market goes down, and these are some good instruments to use if I expect the market to drop. But as we analyzed in the charts earlier, we could still rally for a few more days. So I don't see any need to hedge. The other one I'll use is SARK. And that's the same. That's also gone down, moving down, although this looks corrective right here. This looks impulsive. This looks corrective. We're getting to be around a 50% retracement of that move up. Although it could drop a little bit further, you can have a little bit of a deeper retracement. This thing could be ready to take off again. So that probably is going to be the first one we'll use to hedge if we need to. If the market looks like it's rolling over and dropping, and so that's the only position, and that's the only one I'm going to have right now. We'll see what happens there. Again, a lot of that is because of what I just showed you on the S&P chart, that it just looks like it's in wave C, and I don't want to be loading up on a bunch of stocks and then have this happen, have an impulsive move down. So now again, if we start bumping up above here, yeah, we'll start adding a bunch of stuff, because who knows, maybe we have hit the bottom at that point, and I'll believe that when I see it, though. I have to wait to see that. All right, so, and then there's another one that I liked on that watch list as well, that we had added recently, this PSTG. I talked about how, this was a strong move down. Then we had this impulsive move up, and this looks like a corrective move back down, maybe a double bottom right here. And, you could put a stop down below here. You could put a stop down below here. You could wait for this to go back to a buy signal to get a little bit more confirmation on it. I just didn't want to add anything else today, but that's one I'll keep an eye on. But it is one that I like, and if you're looking for trades today, that's why we had the class. Is if you're, just because I'm not trading it doesn't mean you can't trade it. So if there's things that you like and or that I go through in class that you like, then you can always make that decision to get in. Let's go into a few more sectors here. Let's look at consumer staples. Has moved up the list here. It's getting near the top, there's some familiar names in here. Coca-Cola I like, 94 strength rank. And again, this looks very impulsive right here. This looks corrective. It's a deep correction. Then you have impulsive up. It's went to a buy signal and then it's pulled back a little bit. But it looks like this is looking a little bit choppy right in through here. So it looks like just a correction of this move up right here. It could bounce around a little bit, and you want to wait for it to go back above, go to a higher high right here, or get above this previous. That was a lower high, lower low. You could wait for it to get above there to kind of break this downtrend completely. But it's looking more bullish. It's looking like a more bullish trend right there. Probably could use a little bit more confirmation, and it's down today, so it's something to keep in mind too. You might want to at least wait for it to move back up again, have a day where it moves back up again. But that's one that looks pretty good in that sector. This SCI, Service Corp International, 95 strength rank. Very similar type pattern there. This whole thing looks corrective. This was the move up. This looks like the correction of that move. I'd probably wait for a breakout, because it could just stay. It could still be in the sideways range if the market drops again. But that's if you wait for the breakout, this is something I talk about all the time. When you have a clear trading range like this, where it's been bouncing back and forth, and it breaks out, the rule of thumb is that it should, after it breaks out, not immediately, but over time, it should move up the same distance of that correction. So you take the top and bottom of that sideways correction, and you can project that up, and that gives you, it's higher than that, but I'm running out of screen here. And that gives you kind of a minimum target of where you could expect it to go if the trend continues. Now, you're going to see me do this a lot when the market bottoms, because there's a lot of these stocks that have consolidated, and if they start breaking out, they're likely to make these big moves if the market conditions are more bullish as well. And and they're not. That's a nice target area, and you'll see the potential. You'll see why I've been being as patient as I can, waiting for that market bottom, because there'll be these high probability trades. You get the market conditions more bullish, and you get these chart patterns breaking out, and then you can see some really nice trades. And like I said, what's going to get boring then is we're going to have all our portfolio loaded up, and we're just waiting for them to get to these target areas. And so there won't be a lot to cover in class, because we're just waiting for them to well, except we can count the money we're making, which will be kind of fun when that happens. So, all right. So that one, I'd wait for the breakout. Another one is this FLO 92 strength rank. And again, this one is a little bit more distinct on a 1-year chart, where you got this kind of double bottom right here. You had this big run up, so this is kind of your correction. You come all the way down. There again, if it can break out, you might want to have that breakout move. But even here, you see you got the double bottom. You got this impulsive move up, and this is corrective. You could, it's. The only problem I would have here on this one, and why I'd probably want to at least break out above this area right here, is where I'd like to put my stop loss at a point where I know I'm wrong. This isn't corrective enough yet. It's kind of drifting a little bit sideways, but I'd want to have my stop down below here, because you have the double bottom, and that's a big risk. And I don't know about the reward. You got resistance up here too. That doesn't look like there's, it's probably a 1-to-1 reward to risk. I'd like that to be a little bit better. So this is one you can kind of watch. Maybe it bounces around, has a little bit of more of a corrective move, and then starts moving up, and then you could use that as your stop, and enter, stop, and you'll get a little bit better reward to risk. But that's a pretty distinct double bottom, though, so that's what kind of jumped out to me. So I thought I'd throw that one out there. And again, you can just keep it on. You could wait for it to break out above up here if you wanted to, and just keep it on a watch list for a little bit longer period of time if you want to do that. And then Procter & Gamble is obviously a Dow stock that you're familiar with, 92 strength rank. And what jumped out at me, obviously you can say, Jerry, this is in a downtrend right here. What I'm really focusing on is you have the stair step down, impulsive, corrective, impulsive, corrective, impulsive down, impulsive up, corrective. That's exactly what you see in a trend reversal, at least the early stages of a trend reversal. You can also call this an inverse head and shoulders pattern. Now, again, here's your neckline right here. You might want it to break above that neckline. There's a little bit more confirmation. But that's a pattern that looks pretty interesting. You could wait for it to go back to a buy signal as confirmation. Question, how long might it take to get up to some of those targets? It depends on your market conditions. I mean, I assume you're going back to where I talked about that. If you have a sideways consolidation, you can take the upper part of that distance, the lower part of that distance, project it upward, and it just gives you a target. It doesn't mean it has to go to that area and stop. It could continue to move higher, but it just gives you a target area that you can kind of focus on. Most people get into trades if you never if you don't know about these chart patterns and rule of thumbs and things like that, you get into a trade and you have no idea where to get out. It's like, okay, I'm in. Where do I get out, or where do I even expect this thing to get to? These at least give you things you can focus on and say, okay, this most of the time. Now, again, I'm not talking about laws. These aren't laws. A rule of thumb doesn't mean it happens every single time, or it has to, but it happens enough to where we pay attention. I mean, that's why we call it a rule of thumb. It tends to happen enough times where we can kind of expect it to happen. We still have to manage it. But I mean, you could have maybe a wider stop, and then it gets up to that area, and then you tighten the stop maybe, or you start looking for any sort of bearish reversal in this area here. The thing is sometimes it's spooky how accurate this is. You'll see a stock go right up to that area, then immediately pull back, maybe come back down and retest the breakout over here, and then go up. But as far as how long might it take to make that move, that's impossible to tell, because there's a whole bunch of factors that you have to have. You know, if you're in a bull market, it could get there very quick. If you're in a bear market or you're in a sideways market, you know, you could move up and come back down and retest the breakout here, move up. It could be sluggish getting up there. So that's impossible to really answer. And again, I don't want to imply that it has to get there. You'll find plenty of cases where it doesn't get there. I mean, just look at a good example is look at NOC. We just talked about this one. Here's your sideways range. You broke out of it. It should go up about the same distance as the range there. No, it came right back down into the range. It didn't work. Now we'll see if it's going to work in this breakout right here. But you know, why didn't it work? Well, it's less likely to work in a bear market. You're in a bear market right now. Probably most of the cases when these rules of thumb aren't going to work or when you don't have the market conditions behind you. But guess what? If you're in downtrends and you get that sideways move and you're in a bear market, you're more likely to get the downward move down to this area. That's more likely to work out right now is these stocks that move in these sideways ranges. In fact, let me go back to so here's the S&P. We had this sideways range. We broke below it. Take the distance of that range, project it downward. Pretty close. Not exact, but pretty close. We had this sideways range then. Take the upper and lower distance, project it downward. Pretty close. But these are more likely to work because we're in a downtrend. Remember when we were consolidating right here, that's what I was looking at. I was like, we should break out of this, and we should go up about that far when we break out. It didn't work. It's less likely to work when you're in a bear market condition. So hopefully that answers your question. And in this case too, when you're going with the trend and you're using that rule of thumb, you know, you're probably going to get there pretty quick. You know, these got there within days. In an uptrend, it may not get there as fast as an uptrend, but it should get up there pretty quick because there's buying interest. You're in an uptrend, there's buying interest. You're with the flow, you're with the trend direction. But you start to see how important it is to get the trend direction right? And to not fight the trend. That's why we don't want to be buying up a ton of stuff right now, is because we'd be fighting the trend. And because we're not shorting, you know, but guess where we made most of our money of the year? Most of our money this year so far has been made on those inverse ETFs. Whenever the market's going to drop, we jump into those. Those have been making most of our money. Not that we haven't made money in some of the other stocks, as we have been in stocks, oil stocks that have been going up with the market going down. We've been making money in some of those other positions, but the quicker money is maybe a better way to say it has been on those drops. So we've gotten into those inverse ETFs and made money on those drops. All right, I'm out of time, so I'm going to wrap things up. So again, just to kind of reiterate what I mentioned earlier, this could just be wave C of a bearish ABC pattern, maybe a few more days. Look for a bearish reversal. And we've got tomorrow and Monday before Tuesday's class. It might be about Tuesday that we're seeing if there's any sort of reversal, or, and that's assuming that it doesn't reverse right here. There's significant resistance there that it could reverse on. Maybe we get a bearish reversal candle tomorrow. Who knows? Also, keep in mind the jobs report is tomorrow. That's going to be something that the market is going to focus on. It doesn't always focus on it in a big way, but it could tell you it's going to be a signal that could indicate if a recession is coming or might be coming. Now, what does that mean? Don't ask me, because it could be a situation where bad news is good news. The job, there could be less jobs, and the market might view that as, oh, a recession is coming, so the Fed might not be as aggressive in raising rates, which could be bullish, right? It could be that bad news is good news. I don't know, but again, I am pointing out that you'd want to just don't try to understand whether bad news is bad news or bad news is good news. Just see what the market does. Do we get a big bearish reversal candle or a big drop off of that jobs report? That probably tells you that we might be on another move, have another move down underway. If it breaks that out through here, it could tell you the market isn't too concerned with it. But again, keep in mind that we could be in wave C of that bearish ABC pattern, and we'd still be kind of looking for that bearish reversal candle. All right. Thanks, everyone. Have a great week. We'll see you on Tuesday for the next market update. Bye now.